Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates, and we're just getting on with this metals update to about 4:43 p.m. Central Daylight Time. These boards are going to clear in a moment or so as the markets get ready to reopen for Wednesday's trade. But this is Tuesday, October 3rd, 2017, waiting on the markets to start up for the Wednesday trade, which is 15 minutes from now. Another lost day in the gold and in the silver. Copper put on a bit of a gain. Platinum gave up some ground. The dollar was slightly higher to a mixed chorus in the foreign currency market. Now, this is a nonstop market in stocks. It's just beyond anybody's thought that it can just go day after day, but I think it's, 5 days in a row to the upside. And as the market is building in the idea of potentially a new Fed chairman, the idea that if we even keep Ms. Yellen, more rate cuts, more rate hikes are on the way. And if you watch at all this, you're seeing that the gold has gone back down on the weekly chart to the 100-day average of closes, but momentum is starting to wane in the market. You see how it's gone straight down from 1351.20 to 1274.60 on a close. Pretty big break, about $80. When you look at the chart action, you see how the break has ensued and how it keeps going with the pattern of lower highs and lower lows in place. That's the definition of a downtrend. Take out 1293.20 and that pattern would be broken. When we look at moving averages, we're under the 18-day, and we're fighting a battle very close to this 100-day. I invite you to also place on your chart the 200-day moving average. It's just under where we're at here. We're getting into an area that's very important in gold if it's going to hold up. So I'd be watching that. In terms of Bollinger Bands, the market is staying above the Bollinger Band by the 100-day average. And in terms of momentum, you have what's called an embedded reading. What that means in a nutshell is until the red line here, which has a value right now of 6.89, closes over 20, this market on rallies is still favored to be sold, looking for further decline in momentum. Now, the idea of slow stochastics is that momentum leads price. Is it always that way? There's nothing in life that's always. But that's the idea of the indicator, and therefore until it's lost, I'm viewing that rallies back up are still going to be sold by the pros. There's a warning sign, though, and I'll show it to you in a minute in the miners. In the GLD ETF, we're seeing bailing. If you're reading the paper, you're reading that the investors have been bailing out of these. Why not? They've gotten themselves really caught. They've watched a market that's gone down from 128 into the 120 level. And for a lot of traders, that's some pain that they're dealing with. But when you come to the GDX, this market has been leading the actual futures trade, the raw material. And suddenly today, you've got a pattern of a higher high and a lower low. It magically held the 100-day average. The momentum is such that if it's up tomorrow, the odds are that the math is going to make it lose the embedded reading, and then the potential's back in place for a challenge of the 18-day moving average of closes. I'm wrong, obviously, if you keep the embedded reading, and until it's lost, it isn't lost. So I'll be looking at that, but I've got my horns up that maybe a short covering spree is about to hit. In the gold-silver ratio, I'm looking at a market that has recently gone from 74.33 to 77.10 and has stalled out. Now, these numbers mean how many ounces of silver in a perfect world would you take to a store, no commission, none of that, and you would get an ounce of gold for it. And that just gives me an idea of the momentum, which part of that market is stronger. Right now it is the gold that is still stronger than the silver. And when you look at the silver chart, like gold, it's got the embedded reading. Unlike gold, it's got a pattern of a higher high and a lower low. It's well underneath the 18-day average, I'm sorry, the 100-day average, and the 18 is marching down towards that 100-day. If you were to get a bearish crossover, it could be a bad signal in this market that you're going a lot lower. So all the metals, you got to start looking at them very hard. What's October going to hold? And we'll talk about that in a minute when we talk about the more research. In the copper market, the pattern of this market has been difficult because you have a swing line that's got higher lows and higher highs, but prices are staying under the 18-day average. So the trend is up, the bias is down, and my concept of bias is when a market is under the 18-day average, it has downside bias. When it's over it, it's upside bias. I use this in part as a filter on the swing line. Then I look at momentum, of course, and momentum is pointing up. So I've got downside bias, an uptrend, a market that so far is refusing to close over the 18-day average of closes, but there is the battleground. If the market were to get a big jump, maybe the 305 level, keep in the back of your mind in copper that this particular week in China, everything is closed. It's a holiday week. So you're not getting a lot of physical news out of that country right now. In the platinum market, you've got embedded reading. Bearish as can be, like the other two metals, the gold and the silver. The pattern is one of lower highs, lower lows, rallies still being sold by the pros. And here, I want you to take a look. You're about to get a bearish crossover in price where the 18-day could go over underneath the 100. If that's the case, often that's accompanied by lower prices. Again, that word often is not the word always. So more downside momentum. When we go to the palladium market, as I mentioned the other day, it looked like it was going to fall out of bed, and it did. You're back into nothing now. You've got a higher high, a lower low, a narrowing of Bollinger Bands. Momentum has gone flat in the market. It's almost as though the wind's come out of the sail, and it's just sort of sitting. In the dollar index, you are still in a market that is it embedding? Let's take a look. Both numbers here are over 80. The day before, they were not. You just have an overbought market at this point. So we have an overbought market that's running into resistance at the upper Bollinger Band. It might reach for the 100-day average. Don't know. But obviously, you've had a heck of a run from 90.93 up to the current high now of 93.77. It's about 3 cents. It's quite a bit of a rally that we've had. As you can see, the boards have now cleared behind me, so we're waiting to get for the 5 o'clock trade. More Research Center. Let's talk about what they are. Obviously, this is their disclaimer, but they look at key dates for seasonal probabilities. I wish I could say that even when they'll list a traded, it's been right 93% or 100% of the time that it stays that way. Let me tell you the caveat because I'm like Swiss cheese. I've tried all these things. There is no such thing is walking on water. It's what happened in the past, and the past does not guarantee the future. It gives you an idea, and this is what I love about these charts. They give you seasonals, but they're interactive. So you can go back 5 years, you can go back 15 years, you can go back 30 years on the charts. It'll give you an idea what the seasonal is. Then, on the sides here, you can look at your chart and say, what happens in a bull year? And you uncheck the neutral and the bear years, and you see the pattern clear as can be. You can put your cursor over everything and see key dates in the market as well. So you use this in many different ways to give yourself what? The potential of an edge. Then they write special reports, a lot of articles that are in this, and it gives you an idea of the fundamentals of the market. Again, what does it offer? It offers you another trade tool. I've been using it for 40 years. I've learned how to use it in looking at the fact and understanding that there is nothing that guarantees tomorrow. I don't care if the probability was 100%. I've gone into those trades where suddenly I'm the 1 year it doesn't work. Don't you feel like that some of the times? It happens. 2-week trial. Give us a call. You can go to our website at www.iraepstein.com. You can click up here, fill out the form. We'll make sure that they get it. Or underneath it says, click here for Ira's free information. Do so, and we'll get everything in your hands. Thanks for watching. I'm Ira Epstein. I'll see you tomorrow.